What is up, Outlier gang? Good to see everybody out here on a Monday, hooking and jabbing with the market. I'm going to grab the chat. The goal for today is to walk through the markets just a little bit, talk about some things that are going on. I need to poke through a little bit more because I'm still generating more information for putting on more positions at this point. As I take a look across my portfolio, I am only 79% allocated, 79% utilized, and that is also just way under where I want to be right now. So the goal is to start finding some ideas. Now, I kind of have to make some adjustments actually to this because some of the capital in the account is going to move relatively soon. So if I adjust off of the new number that the account will be at once I slide some capital around, I'll be at like 132% allocated and utilized. So that's definitely more in line with where I would expect to be right now, because I am trying to use as much capital realistically as I can, because the way that I'm looking at markets is we're at a really interesting point, and I think that there is a lot of opportunity, but we're still kind of sensitive, I think, but it's not enough to deter me in any sort of meaningful way. I don't know why that's giving me grief. What's wrong with this? I'm trying to update one of my, oh, that's why. I was trying to update one of my trackers in my Excel sheet so that I could tell you specific numbers, but we had a small error. There we go. All right, a little bit better. Who do we have hanging out today? I see we got Tommy, David, eating crayons. Enjoy those crayons. I see we got Liz, Tanner, running DGen. That's a great name. Big fan of somebody named running DGen. That is quite literally pretty epic. Big fan of your work. We got Day Swag, Roaring Clay. Whoa, that's awesome. That's tough because there's somebody else that hops in the stream once in a while named Roaring Titty that I have a giant fanboy for, because the name Roaring Titty is just hilarious. But then we now have a new Roaring Clay, and you might have to fill in the name there, but not gonna lie, that's up there. That's really up there. That's fantastic. So Day Swag says that's competition. Yeah, it's legit competition. All right. So the first thing I wanted to start with actually was this. Somebody sent this to me via an email because they knew Roaring command line interface. That's what it is. Yeah, that's why it's CLI, LI, lowercase, dot. Yeah, I see you. Whether or not you want to be, in my mind forever, you are now Roaring Clitty forever. So that's just how it is. Ape of Trades is here. Nola. Great to see everybody. So the first thing that I want to start with is this. Somebody sent this in to me, and because they knew essentially how I feel about this stuff, but I'm curious how you feel about this. So here it says, my first perfect week, 11 of 11 green trades with an 18 of 18 streak. What do you guys think? Why would I even bother bringing this up to you guys? Obviously, I'm happy that they had a good week, and I'm happy that they're on kind of a green streak. That's cool. David says it won't last. That's part of it. I would love for it to last. So the fact that it won't last isn't necessarily the specific reason why I'm bringing it up. But David is 100% correct. It won't last. So let's riff off of that. There we go. Nola is now moving down the path. Nola says he's about to be overconfident and lose it all. Tommy says one loss, whip all profits. Now, again, we don't know what the quality of the profits are. I didn't click into it. Maybe he tells us. My bad. Maybe I'm going off half-cocked. Here we go. Not going to lie to you. Too many words. So don't know what this says, but I don't see numbers in bold. So I don't know what anything means here. But what I can tell you, and the reason why I think that this is topical, is because this is so common for traders to do And it's so common that this is going to be a problem. I guarantee you this is going to be a problem for them. I literally guarantee you. I would bet money on it happily. And I don't want it to be a problem for them, to be clear. I really have an issue with people who wish other people fail to prove their own point. How fucked up is that? I would love to be proven wrong, but I would happily bet money that this is going to be a problem for this person. And the reason why it's going to be a problem for this person is because this person, I can almost guarantee you, is starting to create a skewed sense of trading, and they're focusing on the entirely wrong things. That's it. The fact that they had a perfect week, the fact that their perfect week includes 100% winning trades tells me you're looking at the wrong thing. I would rather have an imperfect week with one winning trade that was massive, and I made a bunch of money on that one winning trade, and my 10 losing trades were insignificant, and I made a bunch of money, right? This person is focusing on winning. They're not focusing on making money. And that might sound kind of weird, but the problem with options is that you can structure trades that win a lot. You can build super simple strategies that will win literally 9 times out of 10, easy. That is not an issue to come up with. It's quite simple to do. But the problem is we're looking at the wrong thing. The fact they attach the word perfect and weak with this is the qualifier tells me this is a problem. Now that might seem, again, kind of deep, esoteric, reading in too far, whatever you want to call it. But again, I bet fucking dollars to donuts. That's exactly what's happening here. And fun fact, I learned more about the saying dollars to donuts. I like to look up those kinds of sayings. And it's as silly as it sounds, right? Like the fact that somebody would put up money and essentially risk donuts. So I kind of like that. I don't know the first person that said it, but I like what they did there. It's fun. But that's exactly what I bet. So like this here, a red trade here or there isn't a big deal if I keep them small and catch the big ones more often. Here's also what I can tell you. This person is probably not catching the big ones. So I say all of this, and I want to be really, really clear. I just read another line in this, and it doesn't surprise me. This right here. After 3 to 4 years, I was starting to give up after having a few bad weeks. I was literally just about to say that this is the kind of person when they have losing trades, it's detrimental, like massively detrimental. I didn't read this yet. And here it is. It makes total sense to me. I see this all the time with traders. And that's why I want to bring it up as a point, not to shit on this person again. Like I'm stoked that they're doing well. I want to see traders do well. There's no reason for me not to want that. It's completely it's zero impact on me. So why wouldn't I want to see somebody else do well? I want to see them do well. But this, I feel like, is such a great example for people to be aware of, these kinds of cognitive biases that we're literally riddled with them. It's kind of frustrating once you start looking into it a little bit deeper. So if I grab my website, I go to resources, I started building out this really ugly page, but it's literally just for a reference for you all. But here's 23 of them. Really simple ones, just tons. And like, here's the funny thing. I started making this list when I was building the options trading for beginners syllabus. If you guys haven't seen that, it's kind of this guide, this thing that I built. And this is also on the website now. Like you can check this out here. It'll both take you to the file, and then if you wait a second, it also populates down here so that you can navigate it here if you're so inclined. But anyways, I was building this, and as I was building this on this page, I started figuring out like the topics that I feel make sense kind of in a natural progression. That's why it's laid out like this. And this is free for everybody. This is just because I don't see anything good out there like this. I'm not saying I got the right answer. I don't. I'm just a random ass dude, but I don't see something better or at least accessible. So I just throw it out there for general consumption if it's helpful. But I started listing out like the stuff that I thought made sense, like topic, subtopic. Yeah. Okay, great. And then look at this. Look at the size of these subtopics, right? For these different categories. Trader organization, that's a pretty big thing. You guys hear me talk about that a lot. And then I get down to this, trader behavior and decision making. I'm like writing down, this is just off the dome, off the top of my head. I'm just writing down things that are coming to my mind. And I was like, holy shit, there's a lot of ways that we sabotage ourselves. So that's why I made that other web page, because I just feel like at this point, it's literally the largest section in here. Think about that. I've been trading this is my 17th year trading, and this is the biggest section I have for you, which pertains to trading behavior and decision making. So what I'm highlighting and what this naturally highlights to me is that the process of building an edge is like entrance stakes to play trading. You don't get to trade, well, you can, but you're not going to be here long if you don't have edge. So for me, that's like a granted. If you're going to trade, your sole initial focus has to be edge. Otherwise, none of this other stuff matters. So when I'm thinking about trading and talking about people getting better at trading, we start at that understanding. You have to have edge to start. Once you have edge, then all of these other things start to become the sole focus. And it's funny because I actually would argue that developing an edge in trading is not hard at all. It's not. You can look up studies. You like, there's a million things you could do to make money in trading. I personally believe the hardest part about trading, once you develop edge, which again, I don't think it's that difficult, it's this. It's being able to do the trading. And for a lot of people, all of these different things are what sabotage your edge that you may or may not have. Hard to have an edge. And then once you have it, you got to keep it. And this list of shit, I think, is what screws most people up. So that's why when I look at this, this is the largest section that I have for you in this document, which I can't help but find that pretty funny. So this person is showing me a lot of issues with this one post. And again, I hope that maybe they see this and maybe they'll, consider a little bit about what they're doing. I hope so, because again, I want them to be successful. But it just looks sketchy to me. And I also have to be honest, if these are dollar amounts that we've won, that's terrifying. I honestly thought that these were percentages, but I can't tell. Let's turn our heads here. Are those dollars? Oh, I hope those are not dollars. I hope those are not dollars. I mean, actually, I hope they're dollars. Wow. This is like a damned if you do, damned if you don't. Because if it's not dollars, having a 77% return in a day is catastrophic. That tells me massive problems. But also, if we're down to tracking $8.20 in a day, that also tells me big problem. Damned if you do, damned if you don't. Good luck, homie. I really, really hope that this stuff works for you. I genuinely do. But the biggest piece of advice I would give somebody like this is literally throw this out. Throw this entire mindset out immediately. Rid yourself of the burden of caring about what percentage of green trades you have. Get rid of, the only streak I care about is my reading streak on Kindle, literally. And it's not because I'm like some super smart brain. It's because I like seeing the streak. That's it. But what I'm highlighting is that I don't care about the streaks. I care about the output. I care about the outcome. So in this case, we're just looking at the wrong things. I think I've beat that point to death. I just think it's such a pertinent conversation for literally everybody, myself included. It's important to remember this stuff because it is so easy to get sucked into worrying about the wrong shit with respect to trading. So that's that. All right, let's get this out of the way for now. And then let's hop over to the markets. And as always, if you have any trades on that you want to talk about, if there's a ticker that you want to take a look at, let me know. Happy to take a look. Alfonso says he writes it down on paper, so probably has a plain money account. Not that there's anything wrong with that. No, I think that's great. But I would imagine they don't have a paper account. My guess is they might just be a little bit more old school. The reason why I say that is because they were saying after 3 to 4 years, like if you're still trading paper after 3 to 4 years, we have a giant problem. So I don't think that this is that scenario personally, but it could be. Just like we were having a really interesting discussion in the Discord not too long ago about there's I guess like a Roaring Kitty doppelganger account on X. I literally forgot the name of the platform. So there's a Roaring Kitty doppelganger account on X, and we were having a really fun conversation in the Discord, like an argument, but I use the term argument in the healthy sense. Like most people have a bad connotation for an argument, but the actual definition of an argument is just an exchange of ideas, countering ideas. So anyways, we had a healthy argument. I have to add healthy because again, the standard connotation is that it's bad otherwise, but we had a discussion, debate, argument about whether or not we think that doppelganger account is Roaring Kitty or if it's somebody else playing. But those kinds of like intellectual conversations, just debating things, I find to be really, really useful in kind of staying on your toes as a trader and then just exploring ideas. One of the things that I really focus on within the Outlier community is stripping away the need or the urge to be right and focusing more, what I call focusing on truth. I genuinely am the kind of person that if like I do not care if I'm wrong. I do not care because I do not allow myself to attach ego or identity to the point of view. So if I'm talking about a scholastic discussion, I don't care if I'm wrong. Now, what I do care is if we can't have a healthy conversation to figure out what the truth is or what right is or what's accurate, because that's rare to find people that can have a healthy argument and exchange ideas to try to find something. Most people, they argue from a position of wanting to be right. And that's exactly what that trader was showing us, is that they're obsessed with being right. And it's a giant mistake, I think, because it just makes people dumber. It's if you become egotistically or just any sort of your personality is attached to this idea of being right. And it's because as a community, we do a terrible job. Because, for example, if somebody makes a call and then they're wrong, well, they don't hear the fucking end of it. And rightfully so, because most of the time when people make calls, the only thing that we're waiting is for the one time that they're right, and then they'll never let you hear the end of it because they're making calls. And to me, it's just all such a fool's errand and a waste of time and emotional capacity. I really prefer to focus on other things. So I think that idea of like stripping away your identity from your, especially in trading, whether you want to take this more broadly, I try to, but whether you want to take it more broadly, that's up to you. But I think stripping away the identity from your points of view with respect to the market, it's just healthier. And if you're like, I tell you guys all the time, I'm wrong all the time because I genuinely don't care. I care about making money. That's why I trade. So yeah, I feel it's something that probably isn't talked enough about online or just in general trading communities, because we place such a crazy emphasis on whether or not somebody's right or wrong, or even even better still, when somebody updates their opinion. I love that, because to me, that's Bayesian statistics. You're supposed to do that. Based on what I know right now today with every piece of information, I am going to develop the best possible thesis for whatever it is I'm talking about. And if the thesis is good enough, I'm going to have very strong conviction in my thesis. But there's something else you hear me say all the time: strong convictions loosely held. That means we do a really good job scraping together everything we possibly can to come up with the best theory we can. But as soon as there's new information or new evidence that's really good, that contradicts what we saw, we drop that shit like it's hot and we adapt our thoughts to the new information. That's pretty much it. But people hate doing that because we attach our identities, our egos, and it is super silly. Mac Chicken says, I follow the account. I'm curious how it plays out. There are too many wild pieces of the GME puzzle. You have to take everything with a grain of salt and keep eyes everywhere. Yeah. Yeah. Well, I think with GME too, we were talking about that in the Discord. One of the, let me see if I can find it, because it's probably buried. Like the Discord chat, I literally set up like a specific thread for GME because the conversations, obviously, it's easier to have them all consolidated because there's so much that goes into this thing. But I think one of the really difficult parts with something like GME personally is that the actors are so quiet and non-descriptive in their communications that it leads everybody to kind of going all over the place, trying to pull together information, which is, at least for me, part of the fun. Like that's why I like this thing so much. It's why it's so interesting to me. But from again, like an objective trading standpoint, if that's the information you're going to try to trade off of, that's a freaking nightmare. It's not what I do. It's not what I do at all. That's actually why, if you watch the video I put out earlier today, I trade very differently, right? That's why I was talking about Chewy today in the video, because I still have my GameStop position. We talked about that a million times. Don't have to belabor that. But I don't have an additional position on in GameStop. I'm not playing it directionally with options right now. And it's because the objective trader part of my brain is looking for certain conditions that lead to better potential outcomes for me. I maintain the GME position via shares because, like I told you guys, I like supporting the community and I like supporting the movement. I think it's cool. But the pragmatic trader part of my brain, I'm looking for opportunities to make money, bro. Like, as simple as that. Alfonso says, I'm looking at tickers that have suffered because of extended high interest rates, Solar being one, Sedgwick being on my radar due to the probable September rate cut. Yeah, let's see. Oh, that's funny. They did you dirty with autocomplete. SEDG. Yeesh. That's rough, bro. I mean, they're basing. Wow. This thing over the last year has gone from 169 to 19. You would think that Kathy's here managing. Is she the CEO of this? Did she step down from ARC and start doing this? Is that what I'm seeing? Because I don't know how else you go from there to there in a year, bro. What is this madness? What is this? So they got lowered by GS. They're shown as a sell by these guys. UBS guided them down from 60. Man, bunch of lowers. So they just got beat over the freaking head with a bunch of lowers. That definitely does not help them. But their earnings, man, is not good. Like, what is this? They beat, but not well. They beat on both, but they're still super negative. I don't understand. I got to look out. You pulled up a really interesting name. And this company is this old. This is also shocking me right now. How old is this company? 2015? Oh, man. I hate that. The fact that it's that. So let me give you a couple things that I'm seeing, because I realize I'm doing a lot of internal processing here. The first thing is, if this kind of behavior was happening with a company that was like 2 years old, I'm more forgiving for that, because price discovery, it's still gaining a footing. Like, those kinds of things become more normal. But the fact that this is essentially back from 2015, we've gone from a low of 11 up to almost $400, and then now back down to like 20. Like, this is crazy. This is not normal for any sort of developed company like this. Now, to the point of, who was this that brought this up? Alfonso. So for Alfonso, Carlos says, looks like classic pump and dump. I don't think it's a pump and dump here. it looks like a relatively big stock. How many? What's the market cap on this thing? Not that many. Okay, so it could be a pump and dump. It's not outside the realm of possibility. 57, 299, 404 times the, let's just call it, what did it IPO at? Opened at 20. Got to turn the old calculator sideways. I mean, 1.1 billion. That's not a small company, man. Yeah, that's not a pump and dump. You're not gonna pump and dump $1 billion company. That's why when you see stuff like pump and dumps, it's so common in small cap stocks, and it's why small cap stocks are actually targeted for it. But yeah, I definitely wouldn't call this a pump and dump. It just looks like a company that's royally fumbling the bag. That's what I see, because it was essentially profitable from the jump. It's making good money from the jump. And then the beginning of COVID, it flew off the handle. It's not until recently, until 2023, that it started crashing. Yeah, it started gaining huge leaps and bounds during COVID. Alfonso said federal government subsidized installs. They've done that for a while now, though. At least I'm in California, so they've done that for a long time here. But I do know that the subsidy was going away, or it was starting to change in terms of like the batteries and what you were putting back on the circuit. I ended up saying no to solar. I was going to do it because we get a ton of sunlight and it would make sense, but we're not planning on staying here forever. So it just didn't make sense, especially because California has found a way that if you, like during the day, you're essentially putting power back into the grid, right? Because you're typically net positive. And then towards the end of the day at night, when you're needing to pull power from the grid, unless you have batteries, they charge you for that. It's like, wait a minute, dog. That doesn't make sense to me. If I put it back in during the day, maybe I could get it back at night for free. Maybe if I'm within a tolerance or something. But no, California found a way to not do that. And they're like, nah, man, we'll just probably take it. We'll just charge you for that. You're welcome. David says you should be familiar with SWPR. Yeah, or SPWR, I think. But yeah, definitely. I've seen their chart. Solar is a tough one, I think, because I think that there's good pockets of it. But like in this example, for this specific company, I just don't love. Yeah, I don't love this. Carlos says a lot of solar companies are following this chart pattern, pump at COVID, then fade away. Yeah, that's super common. So what you're seeing is a new industry. Solar industry at scale is still relatively new. And what you are seeing is the strong will survive, the weak will perish. That's exactly what's happening here. And this has happened with every other company in every other industry and sector before you end up in the S&P 500, once you've had a chance to, establish yourself. So this is not surprising to me at all. Now, going back to the thesis for me, I'm not trading this to the upside. Like that's for sure. It can go to the upside, and the upside is actually really close, to be completely transparent. So like when I look at something like this, the point of control is being firmly built around this 24 handle. And if there's like a decent clip up, then it can look good. But yeah, for me, this isn't where I'm going. But if I did, I would just essentially use a stop below this near-term support based on this point of control that's been, chopping across. But I actually like it more for a neutral style play. The problem with a rate cut play, for Alfonso's point, is that we're still a month away, man. Like, I'm not placing rate cut plays now, because the same thing that happened with the Russell can happen anywhere else. And there's a whole ass month that has to go before we get to that. And I have no idea what's going to happen then. We might get a rate cut after we find out that we're balls deep in a recession. That rate cut's not going to mean shit to the market if we're balls deep in a recession. So I am less interested in like drastically trying to front run the rate cut. It's not a bad thesis. And again, like if you're a longer term investor trader, there's nothing wrong with that at all. But again, I'm just a simple trader, but I try to find Carlos says rate cuts lead to market crashes historically. Yes, they do. Alfonso says up 28% in the last 5 days. Yeah, man. Isn't fucking hindsight a hell of a drug? It's one of the most beautiful things. What I can tell you is in the 5 days preceding that, let's do the math. 1, 2, 3, 4, 5. Here we opened at 29 and we went to 19. 10-point drop in the 5 preceding days. So I see you're up 28%, which is just shy of 10 points. And I raise you just 5 days before that, down 10 points. So yeah, shit moves, man. But with the rate cuts thing, Roaring Clee says correlation does not equal causation. Yeah, well, we can kind of track that though. And what Carlos is talking about is actually fair. It's pretty well observed, but I don't have the numbers off the top of my head. If somebody else does, that would be super useful. I don't like weighing in too heavily on things when I don't have the data, but I second that theory and I've seen it before. So I think that it's accurate. I just don't know to what degree and over what timelines. But yeah, I mean, in general, because here's the other thing is like the severity and the type of recession changes a lot too. And the reason why that matters so much is because, well, let's take a look. Let's grab a chart. So what I'm going to do is I'm going to ask ChatGPT, list the dates for US economy recessions for the past 100 years. And we'll literally take a look at a chart. Because the other problem is like the quality of recessions matters a lot and it changes pretty significantly. All right, so let's take a trip back in time to 1929. Here we go. Agent says, who cares? All you need is the correlation. Doesn't matter if it was cause or an effect. That's the wrong mindset. I disagree with that. And you're also running it down the wrong pike because if you go off of bad correlation, you can make tons of terrible trades, tons of them. So I actually think that's a really, really bad way to think about correlation and causation. Now, to your point, which I think you might be trying to say is like trade the move. And I agree with that fully. But I do think it's still very important to decipher the variance between correlation and causation. Because if you're gonna try to attribute a future movement based off of a past behavior, it's kind of important to know what elements of the past behavior actually are predictive. Because again, if you're just going off of correlation that actually might not be that good, this is more in a broad sense, then you don't really have a great trade thesis. So yeah, I just think it's important to consider it. Let me see if I can throw on a log scale and see this a little bit better. You can't. I kind of thought so. That's annoying. Well, this is what it looked like in 29. Kind of super flat. I can't really use this chart. It's kind of useless in this sense. It's actually kind of annoying, to be honest. I wonder if I do like a max monthly, if that'll work, or maybe a max annually. Let's see if monthly works. Not much better. Let's aggregate it more. Let's try quarterly. Getting better, but still depressed. Oops. I'm just trying to see. This is one of the limitations of Thinkorswim. It's kind of annoying. Like going back to further timeframes is really difficult to actually compare. So in 29, it had a range of 31 to 17. And then in 30, so the depression ran from 29 to 33. So then in 30, it went from 25 to 14, 18 to 7. So let's go to 33, 12 to 5. Man, crazy ass moves. And then 34, when we started coming out, was 11 to 8. So it objectively gets much tighter post. And then it starts opening up again in 35. And then 37 was another big recession. Eight-point range, 5-ish point range, tight range in 39. So that was at the onset, after it. So what I'm trying to highlight as I look at this is just not all recessions are going to be created equal. And the way that the market performs around those recessions is going to probably be quite different. That's what I've noticed. And I've noticed that just the way that the market behaves more recently is completely different. And it's difficult to draw comparisons from going back too far in time, because I think the market is like shifting in a pretty big way. I think it's developing like a new set of characteristics that we still have to adapt to. Chris says, can you look at NVIDIA? Yeah, let's take a look at NVIDIA. Let's see. I have 118 call leaps. Just so you guys know, again, I don't care. You can call it a leap, but just so you know, even if it like the S in leaps is it's part of the acronym. It's not making it plural. Just so you know, if you want to call it a leap, I don't care. But that stands for long-term equity anticipation security. So the S is part of the acronym. But anyways, back to this. So we're out in 21 Feb and then 17 Jan. I mean, it's been rallying like crazy. So is most of tech. So I don't see a reason why this wouldn't be kind of a stronger performer in that. I don't see like a giant material change. What does cause for some concern, though, is that a lot of the market is essentially on NVIDIA's back right now. So when we look at this sell-off, different sectors moved differently from, you know, the June. Well, really, it's more this sell-off kind of from the middle of July. But if we take a look at, for example, let me grab a different grid here. Let's look at a 2-buy. And then let's take a look at SPY. And then let's take a look at NVIDIA. And then let's line up this drop from the 16th. So from the 16th here, why are they so offset? 16th. Well, these should be like perfectly lined up. Okay, they are. I was just messed up. Okay, great. So from here, we essentially took a run from 129 down to 90. So 129 down to 90, which is a 30% drop from 129 down to 90. And then if you look at that drop in the S&P 500 from 565 down to 510, 9.73%. So what I'm highlighting is a really sensitive NVIDIA. Like that's a massive variance in risk. So I'm actually curious, just out of pure curiosity, let's take a look at Qs first and see what Qs did as the index. And from the 16th, it went from 498, and then it hit a low of 423. 15%. That's kind of crazy. Let's take a look at QLD, which is 2 times. This went from 107.65. Oops. We need that. 107. And then it hit a low of 76. 28%. That's no joke, man. So in this same move, literally in this same move from the 16th, from a high of 129, like this is massively volatile. It doesn't look it, but it's massively volatile on a relative basis. So yeah, I mean, I like NVIDIA, but it feels like where it's at is it essentially needs to perform near perfectly in order for it to be like accepted, in order for it to be considered good, which is just that's a tough way to live life. If you have really strict parents with really high expectations, you might know that I really didn't. I only had a mom. So, it was all good. But if you did, maybe you know the feeling that NVIDIA has here. They really need to deliver like near perfectly, which is, I think it's tricky. So for me, I mean, I don't think there's anything wrong with it, but I personally, I'm trading TQQs here. I'm not trading the individual companies. And it's honestly for these kinds of reasons, because I noticed that the downside is really aggressive on a relative basis for what these are. And I prefer to get some of the diversification, even though it's in a leveraged product. Because if we take a look, I'm actually curious now to finish this example out. TQQs will be worse, but I don't know by how much more. So let's look. TQQQ and then NVIDIA. So TQs went from on the 16th, a high of 82 and then a low of 48.8, call it 49. So it had a 40% drop. And then from that 40% drop, it's gone from 49, I'm just rounding that up, to what it closed today at 71.3. So it's had a 45% recovery. What's the recovery been in NVIDIA? So from this low, we're looking at 90, 69 giggity, and then 130, 43%. So that's good. So this has had a slightly better recovery, but it essentially had the same drop as something that's literally 3 times levered. That's insanity to me. So the beta right now in something like NVIDIA, in my opinion, is just really, really high. I'm actually going to update this grid because I want to continue to monitor this pair. I wonder if there's a pairs trade opportunity between these. Agent Purse says 3x ETFs are all junk. That's just silly. You're just a silly little goose for saying that. They're not junk at all. That's a giant mistake. That is just a silly little goose statement. They completely underperform. No, they don't. That's just an inaccurate statement. A lot of them do. I agree with you there. But to bucket them all as saying they underperform that's not accurate. So yeah, I don't know what to do for you there. It's just not true. If you look at the compound annual growth rate for TQQs, it outperforms its 3 times over the long enough time frame. Chris says, wait, Agent says they don't come to three times the futures? Dog, what are you talking about? What are you talking about? Let's take a look. Alfonso says, how do TQQQ options perform versus QQQ options? Does the 3 times impact the premiums that much? Definitely. Yeah. So the leverage giveth and leverage taketh. So it absolutely would impact the options premium because you're dealing with something that's much more volatile. So the probability of higher moves on a relative basis it's a huge concern that you have in something like TQQQs. Right now, I have short calls in there, let me tell you, against long shares. The short calls, I entered into them on 6 August. Look at me go. almost bottom ticked it with those short calls. Look at me go. You couldn't time it worse. Remember that thing I told you? Well, okay, you could time it slightly worse, but not much worse. So Chewy says 3x ETFs depreciate great for short term. That's also just not right. These are really common misconceptions when it comes to leveraged ETFs. So leveraged ETFs underperform when the market is trending sideways or when it's trending down and only down. If the market is trending up, leveraged ETFs do really well. And it's because just as they suffer from volatility decay to the downside, if you have a persistent upside like TQQQ's has, it doesn't outperform. It doesn't underperform at all. It doesn't decay. It still has overall friction it has to overcome. So to be clear, it absolutely will have an element of decay. But the element of decay in something like TQQQ's on an annual basis, I want to say is less than 3%. I want to say maybe it's like 1.5% or something like that. So they don't depreciate. They're very slaved to what the market does. Agent Purse says, so over time they underperform. No, that's incorrect. It's not a correct statement. Now, if we say over a long enough time frame, I don't know, because to your point, if we take a look at a time frame and then we try to cast that time frame forward and we have a persistent down period, it absolutely would underperform, no doubt. But what I'm trying to highlight is we can't make the blanket statement of they underperform or even over time they underperform, because it depends on what happens over time. If over time it goes up, right? Like TQQQ's did for a pretty consolidated period of time. If we go in here and we go out far enough, they don't underperform. So the easiest way I think I would offer answering that, or at least giving you a way to think about it, is it depends entirely on the path. That's the way I think about it. Because if we have like this kind of continuation and it keeps going, yeah, man, this is a terrible time for leveraged ETFs. And the other thing I want to be really, really clear is that I do not think that ETFs, especially a 3 times levered ETF, there's no chance that I would trade a 3 times leveraged ETF and then just set it and forget it. That's chaos. That's stupid. There's no reason to do that. And it's because if you do that, you might make a bunch of money. Like right now, if we take a look, this thing has gone from 14 to 71. So it's had a nice run, but over that run, it hit a high of 91 and a low of like 16. I don't want to do that. So I'm not suggesting that we just buy and hold leveraged ETFs and, we're good. That's not what I'm saying at all. But I'm trying to break these misconceptions that you have to like hot potato leveraged ETFs. You literally could have hold TQQQs over the last 5 years, go through this kind of drop down and still murder it. That's what I'm trying to highlight for people. So, and I understand Agent Per, your point. Agent Per says we are just on very different time frames. Sure. Yeah. I don't care. Right. Agent Per says because we've been in a one-way market. It's just such a silly argument because it doesn't mean anything. I'll go back 10 years. Over this 10 years, we had the COVID crash. So that's a bear market. We had another bear market in 22. So like, what's the argument then? This has actually been one of the most consolidated periods of bear markets in the last 30-year history. So it's just not a good argument is all I'm saying. Over this 10-year period that's had 2 bear markets, which again is highly concentrated for bear markets, it's gone from 2 to 71. It's a bad argument. And the thing I want to highlight more than that is like, it's an argument for the sake of an argument, I think, unless you really think that this is underperformance, but I don't see it, right? If I go back 10 years, I'm looking at something that's gone from 272 to 71. That doesn't look like something that's depreciated in value, and that doesn't look like something that's underperformed. Now, if we want to get pedantic and go into how it should perform relative to the 3 times leverage, I'm highly open to that conversation because I agree with you. It often will deviate from its mandate, no doubt. I will I will absolutely run that point. But the broader point is it like, it doesn't matter. If it returns 2.4% times when it's supposed to return 3 times, it's still grossly more. Agent Purse says divide. You can't, that's not how it works, bro. You don't divide T triple Qs by Qs to decide if it's 3x. It's the daily average returns. It's really important to understand, again, how leveraged products work. It's T triple Qs is not 3 times QQQ. T triple Qs is 3 times the daily return of QQQ. It's completely different. Again, people, like, there's just a lot of misconceptions out there. Yeah, but they're different things. So the math that you're suggesting is nonsensical. It doesn't make sense because that's not what it's supposed to do. So anyways, it's for everybody's consumption, right? You might look at it and say, I don't want to go for a ride from 91 to 16. And guess what? Neither do I, fam. It's not what I would do. But you can look at this and say, nah, I don't love this, because one of the things to highlight the counter side, and one of the issues of, I think somebody brought it up, it's different. So for Chewy, when Chewy says they depreciate, they don't writ large, right? They have absolutely friction that they have to overcome, but they do suffer from volatility decay. And that's what this is. So if you have a persistent one side down move, notice how we still have not gotten back to all-time highs, whereas Q's has. If we take a look at the peak on November 22nd, in both of these, let me zoom this out further to a 10-year just so that they're the same lineup. Oh, I forgot this one goes back way further. My bad. Let's do 5 years for both of them. So if we go to this peak here of 91.68, this peak was 408. Notice how this is higher now. This still hasn't gotten back to break even. That's volatility decay. It's not underperformance. It's volatility decay. And the reason why it suffered volatility decay is because this one-sided, really aggressive bear market. Like, this was a big down move. Now, this is also why a pragmatic approach to leverage is really important, because if we look at something like QLD, which is 2 times leveraged, which is way closer to the sweet spot, notice how this is indeed higher. So 2 times leverage, even though it suffers also from volatility decay, it's lighter volatility decay than 3 times, and it has made new highs. Something like T triple Qs, Agent Purse says underperformance, whether you want to play them. Okay, I'm honestly done arguing. You just want to argue nothing, right? Like, underperformance compared to what? I think at this point you're just kind of saying words, because again, like, it's not. If you are comparing QQQ price to T triple Q price, which is what it sounds like you're trying to do, it's wrong. That's not what the product is built to do. So you're comparing nothing. You're comparing your misunderstanding of the product, which just doesn't make sense. So yeah, if you have a decent argument, I'm obviously happy to hear it. But the way to evaluate the performance of T triple Qs is against its mandate. It's not against the Qs outright. They do different things. So yeah, I don't want to blame anything because it doesn't matter. BW says, hey there, Mr. Outlier. First of all, thank you so much for the donation. That'll cover part of my California burrito tonight. So much appreciated. What do you think about Burl and MU stocks for call options? I see they have a lot of upside potential. Let's see. Let's go in here. Carlos says, okay, time to move on. Right on cue. Literally, you could tell you and I are both right there. So, boom. Man. I mean, man, this is a tough one, because I agree with you. I like Micron to the upside long term. I would want to see more still. I would want to at least see it break above this next volume node personally. And it looks like the floor is somewhere around this volume node. But this goes back to the standard question I ask myself. Like, if I'm looking for a bullish trade, is this the best place for my money? And the answer for me for that question is no. This is not the best place for my money. It's not moving right. The other thing I don't love is that it fell on earnings. That's not great. It's not a good look for the product. It wasn't a crazy down move, but it's enough that I care about that for sure. So yeah, I mean, as I look at it, could it be considered for some sort of upside play? It could be, but it's not what I would do. I would wait until it starts actually kind of behaving right. I would want to see the moving averages continue to flatten out. I would want to see, especially these short-term moving averages, turn back around. So like the fact that this 21 is still negative slope is bad news bears in my mind. The 50-day is negative slope. The 150 is flat. The 200 is flat. Like I don't really like all of that. So yeah, for me, for the upside, I don't hate it, but this would be something I would be more inclined to play if I wanted to play it to the upside with like short puts as compared to long calls. Now, again, that's saying it in the context of if I had made that play back here, it absolutely would have made more money to buy calls than to sell puts. So if you like these kind of recovery plays, there's nothing wrong with it. But for me, the way I run these kinds of recovery plays, because I had one in CrowdStrike, because I really liked it when it broke up above this. And then it literally just turned into trend following, because the floor, in my opinion, becomes here for the near-term downside. And like once you get above that threshold and you close that gap out. But from here, it's just a matter of trend following. First floor goes there, second floor goes here, and then kind of follow it up and out. I'm out of the trade now, but because of earnings, I just don't want to take it through earnings. I actually don't imagine earnings are going to be anything terrible, especially because I think the process of holding something like this through earnings is so tentative. You can't apply this standard earnings following models that I use, meaning I look at historic earnings. I want to know how it typically performs and stuff like this. But when you have this kind of anomalous introduction of a news-driven event, those previous models, they kind of become contorted when you're looking at stuff like this. So yeah, for me, it would probably be a pass, but I need to place my dinner order. So we're going to do a pollo asado quesadilla and then a carne asada burrito. Keep it real for your boy. So yeah, if I were to play personally, it would be with short puts. It would be really speculative, and to be honest, I would pass. Like I don't see a giant reason to trade it at this point personally. Yeah. And then you said BURL. See, now this, if you're trading something like this to the upside, I like this. Now, for me, I wait until earnings is over, but this is post-earnings announcement drift to the upside, quid pro quo. That's not really the right way. That's not the right use of the term, I guess. No, I guess it's fair. I could use it there. Fuck it. I'm going to use it. But this is like, this is good. I like this one to the upside. This is really good. Notice how different everything is. All the moving averages are organized how they should be. They're all positive sloping. I like that these are kind of tight. The reason why I like these tight is because the propensity then for them to continue and resume a move is really good. When they become too far broken out like this, they tend to find a reason to contract. And that's giving way too much power to the moving averages. It's not the moving averages that are doing that at all. The moving averages are just capturing people's buying and selling behavior. So as I'm saying, those kinds of things, like the moving averages widening out. That's just me saying that there's new information being rapidly priced into the market that causes a short-term disparity. But then the tendency for them to narrow out are just people arriving at a consensus in price. I just want to be very clear about that, because I feel like sometimes people might hear me say that kind of stuff and they'll think that there's some, pull or gravitation to the moving averages, and there's exactly zero. It is all about whatever price is deciding to do. But I mean, this looks completely fine to the upside to me. The only caveat is it has earnings, but I mean, it's been doing really good on earnings. So this kind of thing, this is interesting. I would want to know what happened here out of sheer curiosity, because I don't know. And it looks like RSI is starting to flatten out, which I don't love that. What are we at here? 61 and 60. Yeah, so it's kind of flattening out day over day. I need to update this tool. I used to have a tool like this that shows the slope for the RSI MAs. Let me add that to my to-do list. Add to my to-do list. Add slope to RSI indicator. Note to self. And then I'll eventually update for the Outlier Pro members on Patreon. I haven't updated the thing scripts in there for a while because it's been a hot minute, but I'll go through and I'll update those soon for you guys. But back into this, I like it to the upside. I just think have to get through earnings. Let's take a look at positioning. Super light options. And there's a little bit of a bet to the downside going on here, which is kind of interesting. And I'm assuming this is for earnings. When is earnings? The 28th. And on the 30th, which is this expiration cycle, there are two really big sizes on a relative basis to the downside. So that's kind of interesting. So another thing I would want to look at here is this. I'm getting better at realizing that I need to put it on this side of the screen because I always forget. Let's take a look at BURL. BURL. Whoa, what have I just done? What did I do? I'm super confused. There we go. BURL. Oh, not NUTO. There we go. They're a little debt heavy. Now, to be clear, what I'm looking at now is building a relationship with the product because I don't really trade BURL. So what I'm doing is I'm not looking at this because this would heavily inform my trading decisions. It's literally to build a fingerprint for the product because I don't have one right now. I don't trade it much. So I'm just getting a general sense of how this thing looks compared to other things. So like I care about current ratio is important. I care about the EBITDA. Like these different kinds of just profitability metrics are fairly important. It has high PE, which for longer term plays typically doesn't bode well. High PE normally is not good. Always exceptions, but generally not good to see. The other stuff I really like to see is revenue, how it does with cash. Like free cash flow is massive, and it's a huge component of the value of a product, but it's 98.76% institutional owned, 1.66% insider owned. So this is like really captured. Cedric says, depending on what stage a company is in, but yeah, definitely. So the stage, I would argue, and then also the thesis duration is really important. Those, exactly to your point, what metrics comprise most of the perceived value over different timeframes definitely vary on those two components for sure. But we're also, again, in a relatively new world where things are changing quite a lot in terms of what the market values and doesn't value. And the market definitely doesn't care as much about high PEs. But the problem is when you look at stuff with high PEs, they typically are going to move a lot because, again, it's kind of like that NVIDIA story. BW says, what site are you using? This is Benzinga Pro. I'm an affiliate for them. So if you want a discount, there's a link in the video description below if you like them. I don't know what their free stuff looks like, to be completely honest with you. I'm unsure. But yeah, I like them. I actually use them primarily for news. So I have this little setup that I use that kind of perpetually scans for unusual options activity, upcoming news that I kind of filter by different things. They give you a lot of choices. Stuff that's moving today, I like this a lot. And then the calendar and then economic data. The other really cool economic data tool that I still like a lot is Financial Juice. And I was an affiliate for these guys. I don't think I am anymore. As you can tell, I don't even really know, to be honest. I just kind of, if it's something I like, I tell you about it. And then if it's something I don't like, I don't tell you about it. But this one I like because you can most of the time click into these, which is really, really neat. So like this one, the US leading index change, you can click it and it'll take you to it, which is just, I don't know. It's super easy to look it up, but I just like that they do that. So it makes me happy, and I'm happy to give them a little bit of a spotlight / shout out because that's a cool feature. It's nice that they do that. But back over to this. What I wanted to see is insider transactions and how they've been like this right here. So I see wow. That's interesting. So the hard part to tell is this happening because they've made a bunch of money because the stock has done really well and they're just looking to pay themselves a little bit, which is completely fair. But like this, Jennifer Vecchio pulled out $1 million. So, and she dropped 7% of her stake. These two dropped 10 and 11% of their stake. This person dropped 5% of the stake. So like, yeah, man. I just don't love that. It's hard to tell because the company's been doing really well, but for earnings, I'm not that bullish for earnings for literally those reasons. Like I see insiders that are unwinding their position leading into earnings. Not saying that that's exactly what they're doing, but it kind of looks like what they're doing. And then I see some put options out here that are dominating to the downside. So I just don't love it through earnings. So I would have to, that doesn't mean it's not going to go up for earnings. It absolutely can. But it just means for the evidence I have in front of me, does this trade deserve or call for my money? And I would say, no, it does not look like that to me. So pass on for me. What else should we look at? I still have some time. My dinner's not here yet. So I'm happy to look at whatever you guys want to poke through. In the meantime, let's grab this and take a quick look through the indices. BW, you got it. Yeah, no problem. Happy to help. Thank you very much for the $10. I appreciate that very much. I got really smart this go around. So I told you guys how I really like the mango orange spindrift. And sometimes I run out like I just did there. But instead of having a secondary that's a seltzer water, I just doubled up. Now I have 2 mango orange spindrifts to get me through, which is exactly what your boy needs. Chris says thoughts on earnings for NVIDIA. We could take a quick look. It's good to see small caps starting to grab a bite. Actually, let me take a quick look at these. I want to take a look at RUT. Oops, too far. All of these lines were, I was drawing all these for context for a video. So I can just get rid of all those drawings. I don't need those. And then this is dead and old. So this looks like we're starting to step back up. So this looks like stop goes down here. Let's take a look at IWM to get a sense of volume. Light volume. Very light volume. Big up day. Sellers stepping out of the way. So stop goes there. This comes off. Yeah, I like this. And then second stop would be something below here. I like this. So for me, this is just a note for my portfolio. I need to add this to my watch list. IWM/rut. And then we'll probably run a RCD. That's what that will probably look like for me. That looks pretty good. And okay, so IWM aside, we were going to look at earnings for NVIDIA. Okay, so it has earnings coming up, confirmed. Go to previous earnings. Up, up, down, up, up, up. Yeah, okay, so wow, look at this freaking EPS trajectory. That's nuts. That's nuts. Just straight parabolic up. Which way does earnings go? Up. Damn. So it looks good, but again, the fear I have for NVIDIA at this point is that it's kind of like we're like late stage here. We're jumping in late, which tends to increase our risk considerably. Because this is parabolic EPS growth of a massive company. So this kind of parabolic growth in a massive company becomes very difficult to sustain. So Carlos says CapEx on all the big companies is still massive, so NVIDIA has at least one more great earnings. Well, again, and that's the important part when it comes to earnings, is that the performance of a stock through earnings is not dictated by its EPS or by how good the numbers look for the past quarter. When we go through an earnings release, a massive part of the stock's reaction to earnings is the forward guidance. That matters a ton, especially in this case. And it's because when we're getting into an earnings release, a lot of the data we already have. We already have a sense for sales throughout the quarter. We already have a sense for even earnings. This is how we come up with estimates for the quarter. And the reason why the estimates are always slightly off is a whole other thing. I think this is an old video, so you guys will definitely have to forgive me. But I don't even think I have it up anymore. Damn, that sucks. Maybe it's under this. Nope. Maybe it's under this. Looking for a video for you guys. It might be gone. Damn, that's annoying. So anyways, I can redo the video at some point, but the Cliff Notes version is that for earnings, there's no incentive to be super accurate, and that's why they're persistently under. They persistently lowball everything ever so slightly. So like when you see, beats, it's kind of an expectation, right? Because again, like if you were trying to be really accurate at something and then this is what your track record looks like, that's terrible. It's a bad track record. So there's a whole slew of conflicts of interest that go into the rating agencies, which tend to be part of big banks, which tend to hold positions in the products that they're rating. So there's a lot of back end games that go on when it comes to ratings. So all I'm trying to highlight for the Reader's Digest version of this is that earnings is important. The performance of the company over the past quarter is important, but most of it's known to a degree. And a really big part of earnings is the forward projections. What don't we know yet? And what is the company seeing that they expect to see in the future? So I still like it for earnings. I don't know if I would trade it though. Let me take a look really quick at another tool fast. I want to see specifically if what their average implied vols are and what their average move is. So let's take a little look. Here we go. All right, and then we need NVIDIA. Let's go to earnings. All right, so the average implied move for the past 12 is 7.7% with the average actual of 8.1. Don't love that. And a lot of those actuals beating implied happened definitely over the last two earnings. So I don't love that. Yeah, so for me, if I were to play it, I would have to favor it to the upside, which I wouldn't really want to do. But yeah, I would probably hold. Meaning wait for post earnings, personally. It wouldn't be my go-to. Carlos says NVIDIA CEO has been selling shares like crazy. Well, the problem is, though, is that, again, it's hard to tell if the CEO is selling shares because they're scared that the stock is going down, or if because they've made boatloads of money and they want to take some of it off the table, which is completely fair. God damn, this guy has a lot of money. Holy shit. I am shooketh. Look at this. I got to do the math. I have to know. This is insane. 25 plus 25 plus 24.6 plus 27 plus 29 plus 29 plus 28.7 plus 30.6 plus 31.3 plus 30.7 plus 29.6 plus 29.7 plus 29.9, call it 30, plus 29.3 plus 40.2 plus 31.9 plus 31.2. Any guesses? God damn. Great guess. Great guesses. Price is Right rules. So, Price is Right rules, Carlos takes it. 502, 800. So, Carlos wins it. Roaring, you're too late. Sucks to suck. And exactly to who is it? Mashton, take a look at this. The delta in his ownership is, I mean, it's like he did nothing. 2, 4, 6, 8, 10, 12, 14, 16, 18, 22. It's like 3.9%. 3.9%. Oh my God. Carlos says he is selling while retail FOMO's in. But again, like, I don't feel comfortable saying this dude is selling. Like, yes, he's selling, and yes, it's massive dollar amounts, but this is saying that the variance in his ownership is minimal. It's like less than 5% change. Roaring says Google says his net worth is 110 billion, which again, if you go off of that, you probably can almost double it. I guarantee it. That will be low. If you essentially almost always, if you Google somebody's net worth, it is almost always low. So I would feel very comfortable at least multiplying that by 1.5, if not 2. I knew the dude was doing well, to be completely honest. I really did. I really, genuinely, I did not realize it was to this scale. This is just an insane amount of money. Chris says, so Take is selling with a grain of salt. Yeah, exactly. Yeah. Like the dude is selling, but it's so minimal as a percentage of what he owns that I think it's very fair to say, take it with a grain of salt. I would. Like, I wouldn't even label this as him selling. I mean, again, like, it obviously is him selling, but like most people, when they say like, oh, the CEO is selling, you know what that infers. They're like dumping their position. They're getting out. And this dude's not getting out at all. I don't even know if he fucking could. Man, there's just so much money. Chris says the news was trying to scare us. Of course, the news is trying to draw attentions and clicks just like most YouTubers do. It's why I'm very thankful for the Outlier community, but like, it's why a lot of my videos do the way that they do, because I don't really agree with going down the clickbait, everything's sky is falling, everything's burning style of content, although it objectively does really well. Places like Doomberg do so well for a reason. Zero Hedge do so well for a reason, and they're great content creators, but they're very purposely playing on that fear because of how well it does. So exactly as Tommy just said, Tommy is right on it. Fear gets clicks. That's the fact of the matter. Which is funny because like the way I create content is in the way that I like to consume content. So if I personally see that kind of stuff, I actually will purposely not click it because I don't like giving them that click. I would rather get the information from something else and not rewarding that kind of behavior because I think it like hyper emotionalizes people. Agent says he has shot up the Forbes list just behind Microsoft and Google guys now. That's crazy. That's crazy. Agent, do you see like where he was before like he shot up? I'm just curious like what his ascent has looked like. This is nuts. I mean, maybe everybody already knew this. Maybe this is old news for most of you guys. Like, again, like I knew the dude was mega rich, but I did not realize it was like sell $500 million and then essentially have no change to your stock position. And this is just one element of his money. Like, bro, you know this dude has real estate. You know this dude has assets. The fact that like this is just this, it's like crazy. Chris said, so I'm okay. I'm hopeful for my leaps then. Yeah. Cedric says he has the biggest company in the world. Duh. That's a bad argument. Again, like just because he's the CEO of the largest company, you would expect him to do well, right? But like there's scale of things. He's still in a publicly traded company where boards have to approve his money. So like, yeah, it's just crazy. Roaring says, I can't imagine having that much money and waking up every morning and go to work. But therein lies how they get that much money is because they don't care. So, yeah, I think that like people that develop this kind of wealth don't care about how much wealth it is. They really don't. They care about legacy. They care about impact. They care about feeling important, like a lot of these other qualifiers. So, yeah. And then for Chris, I don't know about like feeling hopeful. At least for me, that's literally the last That's literally the last direction I would want to take a position. Like, I think hope is just such a terrible strategy with respect to positions. I think whatever your plan is, I would trade your plan. That's my go-to. But yeah, dude, that's nuts. I did not realize it was quite this much. Take a look at this. An executive VP. Hundreds of millions of dollars. Damn. You know, maybe I need to get back deeper in the corporate world, because apparently, look at this. This dude's a director. 20 million, 100 million, 50 million, 19 million, 10, 30. This dude, Mark, is also not doing too shabby. Man, crazy. Absolutely fascinating, though. What a like context provider. That is an absolute context provider. Chris says the goal is 100% return, but I want to remain cautious and not overconfident. Well, I think the problem, Chris, with that is with respect to like a trade. Like, that's not a plan, in my opinion, for a trade. Like, how much you want to make in a trade is not a plan. It's just what you want. To me, a plan with respect to a trade is understanding how you're going to move in different conditions before they happen. That's a plan. So if NVIDIA has terrible earnings and it drops down to 90, I know what I'm going to do. If NVIDIA has a great earnings and runs above 140, then I want to know how I'm going to manage my profits as it goes up. Chris says stop loss set at plus 10%. Yeah, there you go. Okay, so that sounds like a good plan. So, and I think that makes more sense for being hopeful, because it's hopeful in the context of having a plan. I love that. I think that's exactly the right move. That's great to hear. That's awesome. Damn, I cannot believe that dude has that much money. I need to figure out where I've gone so wrong in my life. But that wraps me up for today, gang. I will see you all tomorrow. We will have another live stream. As always, if you guys need anything, just hit me up. Join the Discord if you're not in there. It is full free to come in, so it's pretty cheap. And if you guys need anything, let me know. Be an outlier. See you guys later.